Man, the time has come. I am so pumped and excited to bring this information and knowledge to everybody. I love buying real estate when I find good deals. Just gets like my juices going. So we're going to go through, as you all know, I've been putting out content as far as explaining this to you. I'm going to be sharing with you my process for buying an investment property. Okay, so we're going to walk through this. I'm going to go through this with you step by step, each part of the way. And when hurdles come up, I'm going to shoot probably quick shorts and tell you what's going on. This is the hurdle that just came up today. I got a call from my, title company or my agent, whoever. And we're going to go over all of that. So it's really going to be like a fluid streaming process but what I'm going to do is go to you, explaining this to you from start to finish, from identifying the value property to the whole process all the way up to the closing table. Okay. So I'm really excited to bring this information to you. It's a lot of information. I know many of you probably want to get involved with real estate. If you're thinking about getting involved with investing, I'm just going to give you my process. I've done this numerous times in the past. So, and I also am aware, before I get into that, you're hearing a lot right now that it's not a good time to buy, interest rates are high, and you probably, maybe you're an investor and you think that. I wholeheartedly disagree. I think this is a perfect time to buy real estate because there's not a lot of competition for it. So I would never advise clients to do something that I wouldn't do myself. And this is proof of that. I've been advising clients and friends and family and anybody else who will listen to me that this is a great time to buy. And if I could, I would. Well, I've been, sitting on some money, and I've said, you know what, I'm going to put my money to work. And I identified this property. I liked it, and there were multiple bids on it, but I ended up winning it. So what I'm going to do now is go into a little bit of my history as to my real estate history. So I've bought property, I've sold property, I've bought and sold, or I've listed it and sold it as a listing agent. I've also represented buyers on purchasing property for investment. I've bought property and then flipped it very quickly. Some people call it wholesaling. I've done that. I've also done buy and hold, and then you hold it for cash flow. That's what this property is going to be. So I've identified it as a single family. It is a townhouse, and I don't normally buy townhomes, but this one, the numbers worked, and I really think that it's also an end unit, which I probably wouldn't have bought it if it was an interior unit, but it's an end unit, and from what I'm told, the HOA doesn't get too involved, so that was a plus. But that's why I normally would just buy regular single fams or multifams, things like that. But this was a townhouse. It was I felt that there was room for growth as far as the numbers go. Once I get done rehabbing it, the equity's there. So I could refinance it, which I will do once rates come down. And I've now got a property that I bought at a very low number, and it's going to be worth a lot more once the market changes, or even shouldn't say when it changes, once rates come down and the Fed starts to bring them down. Because what do we know with 100% certainty? We know that rates, they're not going to, and they're not going to go down to the 2 and 3%. I don't think we're going to see that. In my opinion, we won't see that again in our lifetime. But what will they do? They will come down to maybe 5-6%, and that's significantly lower than what I'm paying now. So now you've bought the property here, and I'll be able to refinance it, lower the payment, and I still have renters in there. And then what I can do is recover all the money that I put into the property to rehab. Now I have a performing asset. I have all my money back. I can go in and buy something else. So that's what I'm going to do. And just so you know, I also have a bid out on another property in New Jersey. Okay, so this property that I'm purchasing, so let's get into that. So my process. Here's what I know and here's what I don't know. I'm going to give you two categories. What do I know? I know as an investor how to identify value in a property. So what I can do is look at a property, see its value as far as what they're asking for now, price, and then what I can do is compare it to properties that are rehabbed, renovated, and then see, okay, if I buy it here and then the rehab value is here, how much spread is there for rehab and holding costs and things of that nature. If those numbers work where I can recoup the cost once I refinance, then I'm going to do that. And that's a property that would have some potential. So I know how to identify a value. What don't I know? I don't know how to accurately put a cost on rehab. What rehab costs will be in a specific area for, say, a bathroom, hardwood floors, a kitchen, things like that, a deck. I don't know how to properly value that. So what I'm doing is leaning on my contractor actually, to give me accurate numbers and assessments of what it would cost. It took me a very long time to find a reliable, and here's the key word, trustworthy contractor. I've been, let's say, I don't want to use the word screwed. I've had bad experiences with contractors in the past. And I get that you just have to go with your gut feeling. And I interviewed a few of them. And when I met this gentleman, he's like me, he was very direct. And I just got a good feeling from him. And we went and took a look at the property. He gave me his numbers and was very straight with them. And again, I just got a good vibe from him. We both have been talking, about the property and about other things. And he's going to be somebody that I'm going to be using now for a long time. So I'm very, very glad that I found him. But it will take you a little bit to find somebody that's reliable in an area that you have not invested in or that's not near you. Okay, so this property that I'm identified is going to be in a suburb of Philadelphia. So that's where the property is. What do I know? I know how to buy on numbers, not on emotion. And there's a big difference. When you're an investor, you purely run numbers on the property. This is what works. This is what doesn't work. If the property falls in that it does work, that's where you make your offers and your bids. Okay? And if it tends to go a lot higher than that, you can walk away, put your hands, take back and say, all right, I'm done. It wasn't the property for me. So that's what I do know how to do. What I don't know how to do is figure out the ever-changing cost of labor. And what I mean by that, labor and material, is what the rehab is going to be as far as materials and also contractor labor. And if they're GCing out certain things to, like your electrician, your plumber, painter, carpenter, things like that, what their cost of labor is. I don't know that. So I'm learning this as I go along. And as I go along and learn it, I'm going to share that information with you. Okay? So we're all going to learn this. Listen, we're in this together as a team. We're all learning this together. Okay? What don't I know? I don't know how to give up when it gets hard. And this property, to win it, got hard. But I still won it. I did not give up. Okay? What do I know how to do? I know how to navigate the process from start to finish because I've done it before. I do know how to get creative with financing and with, going outside the box for certain things when a hurdle comes up. I know how to do that. And what don't I know? I don't know everything. So the things that I am going to learn as this process goes, I'm going to share them with you because, again, I don't know everything. But what I do know is a specific piece of knowledge on how to identify and purchase property for investment purposes for cash flow. Okay. And again, we won this property. There were multiple bids on this property, And there's multiple bids on the other property that I have a bid out on that I don't know yet whether I won or lost. That one that I have out on in New Jersey, the first round I lost. I did not win it. My bid was too low. They went with somebody else. But, and this is always never give up. The agent came back and said the buyer who won was borrowing money from a family member, and that was a no-no. So they wanted to go with a buyer who was stronger. So he said, if you want to put in your bid and rebid, you're welcome to do so. Well, I did. And I ran the numbers again, and it's going to be tight, but I bumped my bid up. And now I'm waiting to find out whether I won that one or not. And I have a contractor in that area that I interviewed, and we both we're very, very in tune with each other as far as like our morally and ethically and just from a production standpoint as far as what can be done, what I expect, and can he meet those expectations. We were both in line. So he's going to be my guy there. So that's what's going on there. Okay. So, all right, let's get into step one. So my process, step one, I want to take some money that I have and I want to buy and even if I don't have a lot of money, I want to go buy a piece of real estate, a house, a multifam, a townhouse, and I want to have it cash flow me. So no, this isn't going to be a flip. This is going to be a buy and a hold, buy, rehab, and hold. Okay. What do I do first? I'm going to identify a city, area, or town that I want to invest in. So what area, city, or town have I identified and said, I wonder what's going on there real estate-wise? So for me, this specific area was a suburb of Philadelphia. And so the questions that I ask myself are, this is my research, and you're going to be doing research. Now, I don't really necessarily like to do research, but it's obviously necessary for this. First question, is the area declining, increasing, or stagnant in real estate values? So how is the area market doing? And again, you probably can track a lot of that on Redfin or Zillow, one of those platforms. Or you can hire a real estate agent, because if you're going to be going into the area to invest, I highly recommend finding a reputable and solid real estate agent to invest with and to use to purchase property. Second question is, when you find out the answer to that, let's say, for example, the area is increasing in value. Why? What is the reason for that increase in value? Is there a lot of new construction going on there? Is there a lot of industry coming into the area? Things along those lines. Maybe Amazon's coming into the area, or some other big distributor, it's going to bring in jobs and business. So that's important. So why? If it's declining, why? If it's stagnant, why? Okay, those are the questions that I ask, and then I'll have to do research to find out. Okay, then the next question is what is driving that local market? Okay, so for example, what's the anchor to that area? I like to use the word anchor. What anchors that, when you you're dropping an anchor into this market, and this is what's going to drive it. It's going to have, your job market, income, real estate, things of that nature. What is the anchor to that area? And is there room for growth in that? So let me give you a few examples. Beach towns, Seaside Heights, Lavallette, Long Beach Island, Wildwood. What are the anchors to those local markets? It's one of the greatest anchors you could ever have. It's the ocean. So as long as that ocean is there and there are properties that are near there, people are going to want to go there. And that, obviously that's going to be a seasonal market. But as far as rentals and things of that nature, but for real estate values, the ocean is a phenomenal anchor, because it's never going anywhere. So that people are going to want to be near the ocean. You get a great bonus. You want to buy property down there. Whatever the case is, you know that those areas are always going to withstand huge market swings when something happens positively or negatively in the market. Okay. Let's talk Hudson County, New Jersey, which is my local market. Hoboken, Jersey City, the Gold Coast, all the way up North Bergen, West New York, Edgewater. What Bayonne going south? Bayonne, Jersey City, on the waterfront. What is that anchor? That's one of the best anchors in the world as well. It's the financial capital of the world. It's Manhattan. It's the World Trade Center. It's the financial district. And we saw on 9/11 that these outside forces tried to bring that whole system down, and they failed miserably at it. Miserably. Because humans have a innate ability, a magnificent ability to recover and rebound. We have that inside us, and I have it too. So do all of you. And 9/11 showed us that. So even them trying to take down, the world financial market wasn't going to happen. So because Manhattan is there, this whole area of the Gold Coast will always, always hold value. That is one of the greatest anchors of a local market, local economy. I can share with you one. I had relatives and friends live down there, Lexington, Kentucky. Okay, now Lexington, Kentucky is not a big city. I think it's only like 500,000 people, maybe a little bit more. It's not a big city. But what does it have? It has 3 teaching hospitals, and it has the University of Kentucky in the middle. You have those 4 things. That is a phenomenal anchor to a local market. And there's there's business and other things that are there, but those are the 4 majors. So if somebody was thinking about, hey, I want to invest in Lexington, those are really good, solid anchors that are going to anchor that local market. So jobs-wise, you're thinking of this from a job perspective, income from someone's career. So that is a very safe anchor. Hospitals, colleges, they're always going to be there. You always have younger kids coming in and then people coming out. Hospitals, people are always getting sick. People are always having babies. People are unfortunately getting older and moving on. So that is something that is constant. It's like grass growing. You're always going to need a landscaper or someone to cut grass because the grass always grows. So that's that question. Now, the next question I ask myself is, all right, let me look at the ratio between renters and owners in the specific area. Now, something like that, you're going to need a real estate agent to find that data for you because what they can do is find out and give you how many rents there were versus how many owner-occupieds there were as far as real estate transactions. So an agent would be able to get you that. So the ratio of, is it a more rental area? There's more renters, or is there more people that own property there? I look for that. Then where I go to is income. What's the average income of that market? And to piggyback on that, when you find out the average income of that market, is that something that's going to support the rents that you're going to be needing and asking for in your property? Okay. Now, this is one of the most important, and I highly, highly recommend you do extensive research on this. How are the schools in the area? I'm going to ask that again. How are the schools in your specific area? Schools they are a huge factor in if your rents are going to be on the higher side, if your rents are going to be on the lower side. Okay, and then what it also does too, if you have schools that are not strong, what it does is if you have families that have younger children, they may not want to purchase your property because if your schools aren't strong, they're going to look somewhere else where the schools are. And they will stretch, believe me, and I don't have a family, but I have pretty much every other person in my life does. They will stretch themselves thin can get to get into that school district. So they will be cash poor. But if that means they can put their kid in that school, they're going to do that 100% of the time over being safe and putting their kid in a school that doesn't have, the schools aren't that strong. So, I mean, how many stories do we hear of single mothers, just just going the extra 3 jobs just to put their kid in this school, 3 jobs, all working all hours of the night. I mean, God bless mothers. I mean, Mother's Day should be like, I don't know, once every 2 weeks instead of once a year. They're just phenomenal people, and the love that they have, it's amazing. And I see this. You hear these stories of them just working these crazy jobs to be able to put us, their kids, into these really good school districts because they know that their child being in that school their child's going to have now a leg up on life, quote unquote, and getting into a better career, better job, because that school or a university, that school that they went to, that they worked so hard to get their child into, is going to be able to propel them forward in life. So schools are eminently important in where you're looking to invest. Okay? All right. Now, this is an interesting area. This is very basic, but it's very pertinent. What's the average home price in the area that you're looking to purchase? So, is it commiserate with what you can afford, I guess? Does it fit your budget? I mean, like, what's that? You're that saying, like, hey, I got, like, Dom Perignon. You have, like, Dom Perignon taste, but you have box wine budget, You can't. Those two things aren't going to, they're not unparalleled with each other. And before you bash me for, beating up box wine, listen, I get it. People like box wine, but, if you want to wake up with Tyson Holyfield Part 4 in your head with that hangover, then, yeah, crush all the box wine you want. But, yeah, make sure that the area you're going to invest in fits your budget. That's important. So, all right. Now, again, the property that I'm purchasing, this is a suburb of Philly, so it definitely fit my budget. It's in the moderate. It's moderate as far as values go. And so when I went through all of these questions, so this is step 1, guys, identifying the area that you want to invest. This is step 1. All of these questions that I asked right here, they all fit into my criteria. And I said to myself, wow, okay. Now, again, this is hours away from where I live. But I just looked at it and I identified it and said, I'm curious about this area. Let me find out what's going on there. And all these questions that I asked, they all lined up. Now, there's a couple that are iffy, but they were not major. They're not like majors. Let's put it this way. If I'm working with a buyer and I tell them, okay, I share with them, listen, you got to give me your must-haves, and then you got to give me it'd be good to have them, but if it's not a deal breaker. And they give me that list. This is the same thing. There's a couple in here that are like, well, it'd really be good if those were strong, but if they're not as strong as I would like them to be, where do they fit in the criteria of are they must? And there was really one that was a little moderate, but I was okay with it because I see the area on a definite appreciation. And here's the other thing, and I'm going to talk about this a lot during this process. Guys, look, we are in a stagnant market right now because sellers are saying I can't afford to buy something at 8%, so why should I sell my property when I'm paying 4 and 3 right now? Buyers are saying, man, these rates are so high, I can only afford this. I can't, so I'll just wait till rates come down. All right. This is exactly what happened in 2020 and 2021. Okay? What did we have? We had everybody like everybody on planet Earth was trying to buy property. Why? Because rates were so low. And what was the giant complaint from everyone else? I can't get a property because I'm getting outbid by 50 grand, 100 grand, 200 grand in some cases. Okay. Why not? Just try and wrap your head around this thought, okay? And I'm going to keep talking about this. Try and wrap your head around this. What if you bought a property that right now it's trading at, let's say, $500,000. So the market value is $500,000. but you're going to pay. You can afford the 8%. The rate's 8. Okay, let's say 8, 8.25, 8 1/3, but the payment is doable for you, and it puts you in an area or in a specific scenario where it's beneficial for you and your family. You wanted to get there and buy this property. So you sold yours and you bought this. And yes, you're paying more, but you also have a lot more money in the bank now. So, I mean, you're paying more on a monthly payment, but you've netted the gain from the sell that you've just sold, and now you've bought a property, okay? And you bought it at $500. Guys, the millisecond that the Fed starts to drop rates and we start seeing them fall into the 7s, then we start seeing them fall into the 6s. Then maybe, just maybe, they'll get into the 5s. I don't think they're going to go any lower than that. They may not even get any lower than the 6s, but they're going to come down. What do you think is going to happen to everyone's mind the minute that happens? The buyers are going to go right out there and get their pre-quals and go buy property. And the same thing that happened in 2020 and 2021 is going to happen again. You are going to have a buyer frenzy, and the complaints are going to come. I can't get a property because I'm getting outbid all the time. But you don't have to worry about that. Why? Because you bought your property 2 years ago or a year ago, which is right now. It's right now. You already bought it. So now that $500,000 property you bought probably is going to be worth $560, $580, $600. Why? Because now everybody's buying in your area, and there's this frenzy. People are getting these pre-quals and going out and buying property. So now you have it here. What can you do? You just refinance the payment down. But you've already got the equity now because you bought it when no one else was buying it. I just want to get you guys to wrap your head around this thought. Everyone's waiting for rates to come down. So why do you want to do what everybody else is doing? Don't do what everyone else is doing. Go the other way. Get into that property now. So when those rates come down in 2 years or, whenever they do, I'm suggesting and thinking, and my opinion is it's going to be probably 18 to 24 months before I see anything come down. But when it does, I'm going to be refinancing this one. And if I get the other property, I'm going to refinance that one. But I've already bought the equity because those properties are going to be worth more. Why? Because now when the other ones go for sale in my area, everyone's going to be bidding them. They're going to be bidding up. Everyone's bidding them up. Now, what happens to my value? My value goes up. Guys, this is a huge opportunity. Huge opportunity. Is there a risk involved in it? Absolutely there is. I don't want to dismiss risk. But to get big rewards, man, you got to take some risks. And I'm taking a risk by doing this. And we'll see what happens. But I'm pretty sure based on history, which all this is I'm just going off of history. History tells me that this is going to, rates are going to come down because they always have with 100% certainty. They always come down. They don't ever stay in this They didn't stay at 16% in the beginning of the 80s. They came down. So we know that to be true with 100% certainty. Now, what they come down to, I don't know. But I'm getting, rates right now are in the 8s. So that's my ballpark. I'm going to be in the 8s. Who cares? I can afford it. And the rental the rent that I'm going to be getting will offset that. So I just want you guys to just wrap your head around that idea of buying equity now, because again, once those rates come down, there's going to be a lot of activity between sellers and buyers. So just something to think about. So back to, I know I just went off on a tangent, but back to the task at hand. All of these questions that I had, they all came out favorably. Step 1 came out favorably, identifying the area that I'm going to invest. Step 2, and we're going to get into that in the next episode, but I'll give you a little bit of a teaser, is going to the area itself. Drive the area. Take a Saturday or a Sunday and go see what's going on there. Find out, what kind of business is there, what kind of industry is there, how are the schools, what are the demographics, what industry is there, do you like, are you good there? Do you feel safe there when you're driving at night? I don't know, are there hospitals there? Are there, is there colleges there? These are good local anchors. So things of that nature. Just go drive the area, get a feel for it, see, hey, is this somewhere I want to park thousands of my dollars? That's going to be step 2. We're going to get into that next episode.